What exactly is a Roth conversion and why should you consider one? In simple terms, a Roth conversion is when you move money from a traditional IRA or a pre tax retirement plan account and pay taxes and move the proceeds over to a Roth IRA. The main reason to do this is to pay taxes now in today's rates rather than when down the road when tax rates might be higher. You pay taxes on the money you convert, but once it's in the Roth IRA, it grows income tax free. Withdrawals, as long as you follow the Roth IRA rules, are also income tax free. It's a great way to set up yourself to have a bucket of funds to be able to pull from that is not going to be subject to future taxes. Here's the kicker: Roth IRAs, unlike pre-income tax retirement plan accounts, don't have what's called required minimum distributions, meaning that later in your retirement, you won't be obligated to take distributions from these accounts. This applies as long as you are alive. Your beneficiaries, on the other hand, if you pass a Roth IRA to them, they will have to take what's called RMDs from these accounts. But for yourself personally, you are not obligated to take RMDs from a Roth IRA. Big picture, Roth conversions can be a very powerful tool for financial planning, especially if you expect your tax rate to be higher in retirement. Now let's go through some of the pros and cons of the Roth conversion. Just because, like with any financial decision, there's certainly some things to keep in mind. So let's start with the benefits. One of the huge benefits of this is you are able to get additional funds in an account that's going to grow income tax free, and withdrawals are also income tax free. This can make a huge difference in the long run, especially if you have decades of growth ahead of you. No RMDs, and so unlike pre-income tax retirement plan accounts, this gives you a lot more flexibility to allow money to continue to be invested and avoid paying income taxes on those assets. The third huge benefit is tax diversification. We don't know how income tax rates are going to change in the future. So converting a portion of your pre-income retirement plan accounts to a Roth account can give you a mix of accounts to pull from. This gives you a lot more control over your tax situation in any given year in retirement. You can adjust how you take withdrawals from your pre-income tax accounts versus your Roth accounts. Now, let's go through some of the challenges associated with completing Roth conversion. The year in which you convert the money, taxes are due. So depending on how much you're deciding to convert, this can lead to be a pretty hefty tax bill in the year that you do this conversion. I would highly recommend you work with a qualified tax professional if you're considering doing a Roth conversion. The other additional challenge that may come with this, depending on the amount that you're converting, it may actually put you in a higher income tax bracket. So this could mean that you pay more than you initially expected. Thirdly, timing matters. If you're near retirement and don't have a lot of time, for these converted funds to grow tax-free, it may not be as beneficial to do a Roth conversion. This could be extremely advantageous, for young investors or those with a longer time horizon. So this brings us to the next question: who should consider completing a Roth conversion? Well, we'll start. I would break this down into four key categories. People who are expecting higher taxes in the future. If you think taxes are going to increase because of changes to the tax code or simply because you're in a low income tax bracket now, Roth conversions can make a lot of sense. You pay taxes now at a lower rate and avoid paying taxes in the future when they could be higher. The second category is younger investors. If you're younger and you have a long time horizon to let this money compound and grow in your retirement account, a Roth conversion can be a great great strategy to create tax-free growth. The longer you have the funds in this account to compound, the more powerful the conversion becomes. The third category is individuals with a low income. So, let's say you're in a transitionary period, or you have an extended period off from work and your income is lower in the current year. This could provide a window of opportunity for you to strategically complete some Roth conversions. Moreover, I would say the last category is individuals who want to avoid RMDs, required minimum distributions. If you want to avoid forced withdrawals from your pre-income tax retirement plan accounts, Roth conversions can be a great consideration for you. Um, Also, one other thing to add, keep in mind Roth conversions don't have income limits, unlike Roth IRA contributions. So if your income is too high to contribute to a Roth IRA, converting funds from a traditional account is still a way you can enjoy some of these benefits. So that's the rundown on Roth conversions as an excellent way to potentially save on taxes and be strategic about creating tax-free income in your retirement. But like any decision, it really depends on your individual financial situation and personal goals. If you're thinking about doing a Roth conversion, be sure to talk with your tax advisor or financial planner and figure out what makes most sense for you. Thanks for watching. If this video helped clear up some of the confusion about Roth conversions, make sure to like, subscribe, and share with anyone who you think might benefit. And leave a comment if you have any questions about Roth conversions or need more information. We'll see you next time.